So I'm back with another video on how to trade swing using a breakout of the bullish rectangle pattern. So I've got some charts that I scanned, and I've got these three examples where I will basically tell you how to identify a bullish rectangle uh, pattern. This is a continuation pattern, and while a rectangle can be both bearish and bullish. This one is this one basically is uh, this one basically is a bullish rectangle because the price is in an uptrend. So what I'll do is I'll go here into geometric shapes. I'll take a rectangle here, and here you see the rectangle that I'm making. I'm going to be making a rectangle here. Now the price has been price. I'll remove this line here. Now as you see, the price has been, if we zoom down, price has been consolidating for quite a while. Then it spiked up, but again went into a consolidation. So now what we need to do basically is we've been observing this chart. Like uh, if you're watching 100, 200, 300, 500 charts on a daily basis, looking out for patterns where you can take a swing trade. So this is a very powerful pattern and has a success rate of more than 75%, according to what you can find on Google. If you do a search, if you do a search in Google asking what is the success rate of this chart pattern, you'll find it's above 75%, which is a good rate. Now, we draw a rectangle here now, and we see the price has come here, gone up, come back, gone up, come back. So what we have here is proper resistance, proper support, and a proper trading range. Now, if you, I will zoom in so that you can see it more clearly. Let me reduce this here just a little bit more. Yeah. So a little more here. Yeah. So we have valid resistance of a one touch, two touch, three touch, break, then again four touch, five touch, plenty of touches basically. And we have at least, you can reduce this a bit, and we have at least three touches here as well. One, two, three, four touches. So we have a proper resistance and support. And what we need to do basically is, if you see here, this rate here, let's look at the top of the rectangle. This is very important. It's showing here as 301.30. Is it 301.85? Uh, let's mark a line here. 301.35. So what you're going to do is you're going to place a buy order with some buffer, say 301.85 or 301.75. You place a buy order at some you want to place a buy order a little above the top of this rectangle, which is 301.35, right? So you place an order, say somewhere here. 301.85 will make this long. 301.85. Make, don't forget to change the coordinates here. Although it won't affect your order, but when you visit the chart in trading view, it can mislead you. Just in case you have multiple trades running and you forget. So we'll keep yellow for the purchase entry. Okay, so you have 301.85. Where's the horizontal ray? 301.85, and yeah. So it's basically because the distance so less, it's almost overlapping with the earlier one. So 301.85 is our long. Stop loss will be below the rectangle. So you can keep a buffer here based on ATR or maybe 1 rupee or 2 rupees down. Up to you how where you want to place the stop loss. So for assuming we place the stop loss somewhere here and we make this red. We'll color this line red, signifying that it's a SL, and we can write SL at whatever rate you want to write here. Okay, so this is our SL, this is our long order, and what is your take profit? Your target will be at least the height of the rectangle. So the height of the rectangle is 8.8%, give or take, and you can, this is your take profit. Minimum, this is the minimum that you should aim for. And if you choose not to, if you see that there's movement here and you've achieved your target and you've not put in the target order, what you can do is you can bring your SL to cost and ride the wave. Let it go up and you can trail this using EMA 20 or EMA 10 for that matter. Depends on where you want to place your stop loss. Or you could also trail your SL based on a swing low. You see that price has gone up, it goes up right up to here, and you've not taken you you didn't go for a fixed target, then you can keep a trailing SL at the swing low level here or below this. If the price has gone up further, you can increase your swing low to this point here, the low of this candle, or maybe a few uh, 30, 40, 50 paisa below the low. This way you can keep trailing till finally your stop loss hits, so you have an open target, which is better than this one. This is also not bad, 8.8. When did we, let's look at how many days in the trade here. So we went long here, 8 December, and we achieved our target. Yeah, almost a month in the trade because it sort of went into consolidation again after a bit of advance, went into another rectangle here, if you will. Another rectangle just like this one here. So it took a while. So up to you whether you want to have a fixed target or you want to trail it. So you've achieved your target here. Let's go to the next chart. Aster DM. Now, Aster DM, slowly but steadily the prices are going up. EMA 20 and 50 are supporting it. And you see this consolidation pattern here. Bit of spike, but you have consolidation here as well. If you want to take the wicks here, you can do something like this. Okay, so we have multiple, we bring this slightly below so that you can get this touch in as well. Now, this is a close. So, and this is also a close here, but we've got some spikes here. So, again, price is consolidated here. You've kept this in your watch list. You know what? And you've not entered the trade till now. That's the reason why we are even bothering to look at it. Had you entered here, then we would still make this rectangle, but then we would be waiting when we'll break out. We would be worried that our money is being just, tied up for such a long period. So make this, you've not entered here and you're waiting for a bullish. This is bullish because price is going up, bit of advance, consolidation. You're waiting for a breakout. So where can you enter? You can enter, see there, this is closed here, okay, and then again gone in. And you have a spike here and a spike here. So because you have two spikes here, I would suggest you enter not at this one. I will increase this rectangle size, but if I increase it, the touches go down. So 1, 2, 3. You can enter on, I've got a lot of touches here. This is a spike and this is a bit, okay. You can enter on the high of, once this high is broken. So for example, we are at 352. So you can enter at, you could enter at, this is 350. How much is this? 350, 360. Let me place a horizontal. 350, 360 is the line, right? So place it at 357 or something. 354. Place this at 354. Give it some buffer. Long at 354. Style. Yellow for entry. Okay. So we've gone at 354. Stop loss. Low of the rectangle. Or you can keep a bit of buffer. 314. Now, of course, you can play around with it. You can say SL stop loss at 314. And we make this red. Okay. So here's your SL, here your long, and your take profit is the height of the rectangle, not your SL to long. This is the minimum. Okay. But this is the minimum, right? So I'll keep it here. But can you see your SL and difference between the SL and the long? So it's your SL is more than this target. So we are not going to try to aim for 1:1. That is not a good ratio. 1:1. In swing trading, it's not a good ratio in swing trading at least. So what we need to do basically is you are going to trail your SLs and try for at least 1:2. This is try at least for 1:2 of this. Because you see here, you have 40 rupee gap. So you should at least try for 434. If you see here 40 and 80, you should try for at least 484, which is this, double of this, more than this actually. So you should try for 484. Price did go up to 484 here. It went up to 495. So if you had put in an order, you would have succeeded here and got 1:2. The 1:1 is the target that 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 you will definitely get. But don't try for that. You must try for at least two. Why two? Keep an open-ended target and trail. You can trail based on EMA 20 low. Keep an EMA 20 low, and you can keep trailing till your stop loss gets hit. Every day when the candle closes, keep changing on the basis of EMA 20 low. For example, if you were here, your EMA 20 is 403, but that's the close. You can plot a separate EMA and keep the low of the EMA 20 as your stop loss to trail it. That's one way to do it, or you can use a swing pattern, or you can trail your SL, or you can bring your SL to cost and then let it run. Don't bother and let it run, because now you've got nothing to lose, right? Now we go to Astrazen. Astrazen also, we have long consolidation here. If you see prices slowly riding up EMA 20 and 50, it didn't even breach EMA 50. There was an intraday spike here on 15th of November, and on 15th of November, there was an intraday spike here, and almost it is breached here. for a bit, but didn't go down to, it didn't travel below it. 20, and it didn't travel up to EMA 100. So you have a long consolidation going here as well. Again, you have a bullish rectangle continuation pattern here. This is advance. This is advance, and then this is again accumulating. Price taking a breather, and it is then spiking out. So now you must be totally comfortable now on how to enter, what's your SL going to be, what your target is going to be. You enter above this rectangle, stop loss below the rectangle, and you keep trailing your SLs because you 1 is to 2 is the minimum that you must go for. But if you can ride the trend longer, then you should. There's no point limiting yourself with 1 is to 2. Because, for example, if your accuracy is not even 50%, then 1 is to 2 is not going to do you any good. So, you must write out your winners whenever you can, because you never know how many trades you can lose in a row. So, I will mark the entry here. This is 4917.25, the height. So, I'll mark something like 4918. Yellow. Then I write long at 4918. Giving it a buffer, up to you. You want to give less buffer. You want to give more buffer. You don't want to miss the ride. So if you see here, this spike is 4996. This spike, but the close is at, the open is at 4912. So here again, if you look here, it's 4886. But we are going. If you look at this one, 4900. We are going long at 4918. Okay, and stop loss will be, SL will be below this, below the rectangle. Give it some breathing room. I think no breathing room is required here because there is too much of a gap here. There is too much of a gap here. So in such a case, when the gap is so high, don't even bother keeping it at the low of the rectangle. Keep it here, below the swing low. If the price comes here, it's invalidated your trading idea, and that's okay. 4579.9. Copy this here, and I'm going to write stop loss. So you have to use a bit of common sense also. Make this red. To use a bit of common sense also. Just don't go blindly because, if you read somewhere what is a rectangle pattern, what is it continuation, where to keep your SL, they'll say keep it here or give it a little breathing room. But you have to use your common sense. And something that was taught to me in school and drilled into my brain plenty of times, but we forget it. Common sense is very uncommon, highly uncommon, in fact. So use your brains, no matter who tells you. Whether I tell you or somebody tells you, I tell you, keep it here. Google tells you, hundreds of sites tell you, always keep it below this pattern. Keep it and give it some buffer. Give it 1 ATR or 2 ATR buffer. Please use your brains. God has given you brains and they are to be used. You have, if you see such a big SL, what is the SL here? Almost like 10%, right? I don't want to calculate. So if the SL is so big, you can keep it here below swing low. And you see, and your target would be more than uh, at least twice of your at least twice of your, forget the rectangle here now, we have reduced it. You should try for an SL of at least 16%. So this is, I'm sorry, not 16, 7.6, 15.2. So I'll come here and 15.2. I'm not getting it at the exact figure, but let's keep it here. We already achieved it here. Double this. You already achieved it here. But suppose you kept it open-ended, then you could have gone right up to here, 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 here. And if you trailed it and you kept it at swing low here, then with a gap down, your SL, it would have probably bypassed your SL and then you would have to manually get out of the trade. But still, you would have made more money than 15.2. So keep an open mind. Who knows? This could have gone up, 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 up. There's no end. See, there is, when it comes to bottom, a share price can only go up to zero. But as far as price increase, the sky is the limit. You don't know what will happen tomorrow. So always keep an open mind and go for never ending targets. Unless there is a particular chart pattern or a resistance that you see and you know, or you see a swing pivot somewhere here, or you see a supply zone here and you know that if it goes there, prices are likely to bounce back, that's a different thing. But here, if you see, price is appearing, at least it appears to be, if we zoom down on the chart, if I zoom, price appears to be at an all-time high. Let me reset the chart. 1 year. Price is at an all-time high here. When we were here, this was the all-time high. Nothing there, no supply zone, no close by resistance, no swing pivot. So then why go with a fixed target? Why 1:2? Go for 1:5, 1:10. In fact, keep it 1:to infinity and keep trailing and try to squeeze out maximum profit that you can. Because you're going to take losses also in swing trading. So when you have good runners, you should go with them and try to maximize and take all the juice out so that it will help smooth over and soothe those wounds that you will feel when you lose money on losing trades. So I hope you had some good learning here. Uh, I'll summarize the bullish rectangle pattern. Uh, I call it bullish rectangle pattern because it's a continuation pattern. If the price was downtrending, it would become a bearish rectangle pattern. So it's a rectangle pattern because it's found in a bullish trend. It's bullish. Your entry price will. This is breakout trading. Your entry price above the consolidation rectangle. Your stop loss below the rectangle or somewhere here. If your SL is too high, and you can put in an SL here, and your target should be at least twice your risk. Your R multiple should be at least twice, but don't limit it to that. Keep trailing and try to squeeze out as much profit as possible. If you learn something new, something useful, then please like the video. Please subscribe to my channel. Please forward this to people who are serious traders who want to make money in the market, who want to learn. And thank you for watching my video. I wish you happy trading and I'll see you in the next video. Thank you.